Welcome and thanks for joining us at EMII.com. I'm Caitlin Sisney with your hedge fund headlines. Today is Monday, April 14th, 2008. In good times, a high-performance hedge fund like the London Diversified Fund Management could get away with charging management fees above the industry norm. But these are not the best of times, and so the HF reportedly has informed investors that it is cutting its management fees in a temporary reduction from 3 to 2% for 1 year, according to a letter obtained by Bloomberg News. The reason the letter states is recent financial performance of the funds. Its London Select Fund tumbled 18% this year, while its London Diversified Fund fell 11.5%. Staying with hedge fund news, it's just a matter of time, maybe within the next year to 18 months, that private equity and buyout markets may collapse, Hedge Fund Daily reports. Actually, Baring Asset Management made that prediction with a more certain level of inevitability. Addressing the firm's spring conference in London, as reported by Investment and Pensions Europe, Baring's head of asset allocation, Percival Stanton, says PE is a disaster in the making. Baring's chief investment officer, Marino Valencis, offered a similar gloomy forecast, noting we are going to have at least a few surprises in the LBO private equity sphere. We don't know who the losers will be, but it is definite that something is going to happen in the market. And in other hedge fund news, it is becoming trendy of late for larger hedge funds to swallow up smaller ones through mergers and buyouts. But is it good for the industry? Margot Patrick writes on the Wall Street Journal website that consolidating could result in lower returns if investment processes become too standardized within firms or managers are discouraged from taking sufficient risk. New Finance Capital's manager of Opus Credit Fund of Funds, Patrick Brennan, told the WSJ, where consolidation really helps funds is with their bankers, who are more likely to keep doing business in tough times with the largest funds. And in hedge fund news in Asia, Taiwan appears to be preparing to revise its investment rules to allow domestic pension funds and insurance companies to invest in offshore and alternative investments, Hedge Fund Daily reports. The commissioner of the island's nation's Financial Supervisory Commission, Lee Shane Yan, said at an Asian investor conference, "We are willing to open up and reform." Lee said, quote, "Traditional statistic portfolio theories are no longer efficient." He added that the regulator has signaled the go-ahead for the insurance industry to put up to 5% of its assets in overseas alternative investments. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our hedge funds channel online and read the latest developments.